All right, so this next one is about staging or tiering your stop loss trailing here, right? So essentially, the more profit your trade is making, the tighter your stop loss will get, right? So for stage one, when there's 40 ticks of profit achieved, then George would like to set the trailing to 50%. Now, both BlackBird and Bloodhound don't have percentage abilities because when you're doing a percentage, it's always on something different. So there's no universal way to determine what the denominator is that's calculating your percentage. Right? So a percentage is very unique to whatever situation, to whatever you're calculating your percentage off of. So it really makes it impossible to build in a percentage calculation, within BlackBird or Bloodhound. It would need its own kind of unique kind of custom menu in order to do that. That's very difficult to do in a universal way. We leave that up to indicators to calculate a percentage, right? And of course, indicators are only calculating, one specific formula. Yeah, so if you do have an indicator that has a percentage as a part of its formula, right? Well, that percentage is specific to that formula. So there's no universal way to do a percentage, for all the possible formulas that people may want a percentage on. So what you'll have to do is just manually convert that for you, right? So for here in the text, we can see here. So when there's 40 ticks of profit, right, the trailing stop loss is going to be 20 ticks, right? So if you want to do a percentage, you'll just have to figure that out in your head and basically, hard code that in. So at 100 ticks, right, if it's 70%, then the trailing is going to be, it says here, 70 ticks. I think, George, 70 ticks below the entry. Oh, yeah, right. So, here's something that's a little unique about this. So is the stop loss offset here, this 20 tick offset, is from the entry price. So it's not actually trailing the market. It's just moving the stop loss relative to the entry price. All right. So this first stage is going to be 20 ticks away from the entry price. Stage 2, it's going to be 70 ticks away from the entry price. And then stage 3 here, right, at 200 ticks, then it's going to be 180 ticks. Where is that? Here we go. Yeah, at the end, right? So 180 ticks offset from the entry price. All right, so this doesn't give us a starting or initial stop loss offset here. So we'll just, let's see here. What I'll do is I'm going to start with the 10 tick fixed stop loss here. And just for good measure, we'll take the initial placement and we'll just increase it to 20 ticks. Right, there we go. So we'll start with a 20 tick offset like that. So that's our starting point, right? 20 ticks, 20 tick stop loss. Now let's go to the trailing actions there, right? And let's enable it. So we're going to set the mode to custom, right? And so now we can start building a custom trailing stop loss. The other option here is the standard trailing fixed offset, right? If you notice, the keyword is fixed offset. Well, what is that fixed offset? Well, that's determined by your initial placement. So in the initial placement, we started with a 20 tick stop loss, right? 20 tick offset stop loss. And so this is just going to basically, this standard trailing, right, would be a 20 tick fixed offset, and it's not going to move. But, most people want to use BlackBird so that they can kind of create and mix and match their own custom trailing stop losses here. So we'll put it on custom, and let's add a trailing rule here. And then let's give this a name here. All right, so at 40 ticks of profit, we'll make this trailing rule first. So how does BlackBird know when 40 ticks of profit has been achieved, right? Before it starts performing, before it starts, performing or activating the actions here, right? Executing the actions here. Well, that's what the trigger column is for, right? Is this trigger column allows you to set up conditions that, right, and those conditions determine when that trailing rule kicks in, when that trailing rule, right, starts to activate and do its job. So if we want to find 40 ticks of profit, then there's two ways we can do this. We can use the profit or loss, or we can use the, where is it? Delay. It's right above it. There we go. Or we can use the delay. Basically, they'll effectively both do the same thing. Now, while the profit or loss actually has more flexibility built into it, but since this is just a very simple 40 tick trailing here, we'll just use the delay, right? If you want to use currency, so say like at $200 of profit, then you want your trailing rule to do something at $200 of profit. That's when you would use the profit or loss. So the profit or loss actually has currency built in. It has ATR built in, and tick offset built in. So, but for simple things, we're just going to use the delay here. And we're going to enable the ticks of movement, right? And it's already set to ticks of movement in a profitable direction, right? So if we're looking for, or we want to identify when 40 ticks of profit has been hit. And we're just going to go here and type in 40 ticks, right? There's other options in here, like if we go into 40 ticks of loss, right, you could look for that. You could do something, if there's a certain amount of loss, then, you could perform some kind of action, right? Or there's ticks of movement in either direction, profit or loss, things like that. But, for trailing rules, most of the time you're going to be using ticks of, ticks movement in a profitable direction. So there you go, 40 ticks. So 40 ticks of profit needs to be hit, and then this trigger becomes true, right? So once this trigger condition becomes true, then BlackBird says, okay, I can start performing this action here. And this action is going to be, we're going to take the entry price, and in some cases, you might want to take the average entry price, right? The average entry price, what's the right word here? The only time the average entry price is useful is if you have other order sets here, right? So maybe you have another order set, 2 or 3 order sets, and they're getting into the market at different prices, So if you have other order sets where your entry order is basically kind of scaling in a way, or cost averaging in to the market, creating, a better average entry price, right? So that's when you might want to use the average entry prices if you're cost averaging into a position here. But normally, since we're only using one entry, right? We're only entering into the market, using one entry order. We're just going to use the OCO order entry price. like that. And now here, so from the entry price, this is where we put in our negative 20 offset, right? So there's our 20 tick offset from the entry price, just like that. That's simple, right? So that's our stage one, right, with 40 ticks of profit there. And so now we'll create another trailing rule here. All right, so there we go. So at 100 ticks of profit, so again, we're going to go into the trigger, and we're going to use our delay trigger and enable this ticks of movement. And this time, we wanted it to be 70 ticks. Oh, I'm sorry. 100 ticks. Sorry. Yeah, we're looking for 100 ticks of profit. So I'm getting ahead of myself here. So there we go. That's looking for 100 ticks of profit. And now here in the action, that is where we're going to set our negative 70 ticks offset. And that offset price is from the entry price. All right, so we're going to take the entry price and offset our stop loss. Actually, you know what? I have this backwards. It's going to be 70 plus 70 ticks from the entry price. And same thing over here. Let me go adjust this other trailing roll here. So that was not supposed to be a negative number. Yeah, it's 20 ticks positive from the entry price. Yeah. All right, so that is our stage two there. So we just have one more trailing roll to go, and that's at 200 ticks of profit. Again, we'll go into our trigger. We'll add our, at this time, I'll take this opportunity to show you guys the profit or loss trigger here. All right. So in this, the mode is we're actually looking for a profit, and the units is not going to be currency, but the units is going to be ticks, and you can see, oh yeah, we also have percent. And in this one particular case, we do have percentage, right? Now this percentage is going to be from the entry price, right? So this percentage is, the denominator is locked to the entry price, of this trade, right? So since we do have a specific denominator, that's specific to this situation, we are able to provide a percentage in this situation here, but that's percentage of profit, right? That's not a percentage offset from the entry price. Remember, this is a profit or loss, so this is looking for a percentage of profit there. But all right, let's go to ticks, and we're looking for, we're going to use the maximum amount, and let's see, 200 ticks. There, put in 200, and there we go. So that is an example of using the profit or loss there. And so when we hit 200 ticks of profit, then our action is going to be from the entry price. We're going to tighten that stop loss up quite a bit, and it's going to be 180 ticks away or offset from the entry price. And there we have it. So since this is a staged or tiered kind of trailing stop loss, where it's not really trailing, but it's a staged stop loss where right, the stop loss is moving only 3 times. So it's not trailing in real time, right? But it's moving in 3 different incremental times here. So because this is a one-time action, right? So once the trade hits 40 ticks of profit, we're going to move that stop loss one time. So there is no repeat here. So you might have noticed that I just completely ignored the repeat because these are one-time actions, right? So if your stop loss is a one-time action, right, and I use the word action deliberately, right, the action is moving the stop loss, but since our stop loss, in this type of trailing stop loss, right, it's only moved one time, so the action is a one-time occurrence, so there is no repeating of it, right? So the repeat comes into play when you make a trailing stop loss, a little more typical or a little more standard trailing stop loss. For example, let's just say I'll just throw a quick example here. Let's say once we hit 20 ticks of profit there, that we want to start trailing our stop loss at 15 ticks, something like that, right? So you'll notice that for a typical trailing stop loss, you're actually measuring from the market's last price, right? So this offset is from the last price. So that's what makes, this staged or tiered kind of trailing quite a bit different, right? Because its offset is always from the entry price, but your standard trailing stop loss is going to be off of the last price from the market, right? And then we'll do 15 ticks. I'll just for example. And so for this type of more standard trailing stop loss, this will utilize a repeat here. And so we'll repeat indefinitely. And actually in this case, we'd probably want to repeat this every one tick of movement, right? So every time the market moves one tick, right, in a profitable direction, then we're going to repeat that action, right? So this is an example of your typical trailing stop loss there. And that's when you would use the repeat there. So, all right, let's get rid of that there. All right, so that was our fourth question here, setting up a staged or a tiered type of stop loss there, right, that moves only 3 different times. And instead of using a percentage, right, we had to calculate ourself, right, which is already done here, calculate what that offset from the entry price is going to be. Dean kind of has a related follow-up question here. So he's saying, so regarding the trailing stop, in stages here, based on a percentage, could you use the high water mark? Absolutely not. The high water mark is not a trailing stop loss. All right, I repeat, it is not a trailing stop loss. All right, it is a money management rule here. So it has nothing to do with your stop losses, right? Stop losses are actual physical, tangible orders in the market, right? The high water mark is it's a money management, evaluation condition, evaluation rule, I guess would be the better way to phrase it, right? So the high water mark has nothing to do with physical orders in the market. So let me show you what Dean is talking about here. Right. So I don't want to get too sidetracked on this, but what Dean is talking about is in the money management options here, right? And so your typical money management is something like this. such as like, stop trading if I, made $1,000 today, right? There's no physical order in the market, that's stopping your trading once you've hit $1,000 of profit, right? There's no profit target sitting at $1,000, to stop your trading, right? And the other one, another common money management here is the net max loss. Say like, for example, let's stop trading if we hit a $400 loss, right? These are just rules that BlackBird, is evaluating to say, hey, did one of these rules get hit? But they're not actual tangible orders. And so the same thing applies to the daily high watermark here. So this is not a physical order. It's just a rule where, that tells BlackBird to how to keep evaluating your realized, right? That's why this is not a physical order, because it's evaluating your realized profits and losses, right? So this will turn the trading off if your last trade gave up too much money, right? So think of it, that's probably the easiest way to think of this is if your last trade, or maybe your last two trade, if they were losers, if your last trade or your last couple of trades, if they lost too much money, and too much money is, that's what you're setting up here. The whole point of the watermark is to determine how much money can be lost before BlackBird stops trading. Right, so that's what you're defining is if too much money has been given up. But this has nothing to do with a physical stop loss order or anything like that. So good question there. That was a lot of people. Yeah, we get a lot of people thinking of the watermark as a physical stop loss order, but it is not at all.